What's up, everybody? Double Daddy here on behalf of TokenPathways.com. I hope you're doing well. I hope this finds you in an excellent space, an excellent place. Wherever you are, I hope you're doing fantastic. So let's jump in. We've got a look at the crypto prices today. Actually, you know what? Like and subscribe wherever you're watching this, and I'll fill you in at the end where you can contact us if you want to chat with us. So again, jumping right in, we've got crypto prices. We can see a lot of red in the markets today. We've got a little bit of green. I believe this is largely more to do with world events than anything else, but here is the crypto prices today. Global market cap at $3.37 trillion, Bitcoin accounting for 2.11% of that. So let's just jump in. I've got two articles, and today, I don't like to do this. Today they're from the same source. So let's have a look at the first one. We've got the Fed drops reputational risk rule. A big win for crypto banking assets. Access. So I'm not going to read you the whole thing, but what it says here is that the Federal Reserve just made a big change that could make it easier for crypto companies to get bank accounts. So the Fed dropped the reputational risk from its bank rules, making it easier for banks to work with crypto companies. If you have, I have, so I can speak to this, but if you have tried to make crypto withdrawals or deposits on some banks, they will freeze it. Credit cards, they won't allow you to do it. There is lots of legacy institutional financial clients that won't touch crypto, won't allow you to touch crypto if you are one of their clients. So to find a bank willing to change its tune because of this rule change, the reputational risk change, we're going to see this more and more, and it should make things a little easier. So banks no longer need special approval to offer crypto or stablecoin services. They'll be treated just like any other business, which I think that's mostly good. I think that they do need to have a self-audit, or rather they need to have an independent audit of their stablecoin reserves. I think that's I think there does need to be accountability and checks and balances, because the legacy financial system is, well, it's not the best system, and we'll leave it there. Lastly, this opens the door to traditional banks to rejoin the crypto space without fear of regulatory backlash. So again, maybe you're a banker. Maybe you've made some traditional level contacts. You've met some crypto people at dinners, functions, what have you. But officially, your bank is towing the line that, you can't work with them because, again, the reputational risk was there. But now, if the risk is gone, you are now free to move ahead into that space with the contacts that you've made organically. And if you haven't, this is the doorbell for everybody to start making those contacts. Because again, we are at the tip of the spear with the digital financial revolution. And the folks that act quick and the folks that innovate quick, they're going to win. So it's nice to see that we are seeing a positive regulatory change in the United States towards a crypto-friendly environment. And they're saying what changed? Realistically, the administration changed. That's what happened here. So there's a few more headlines why this matters. There is, of course it matters. It matters for many reasons. But we've discussed a lot about why it does matter. We're welcoming legacy finance into the crypto space with yet another rule change in their system that allows us to, it allows us to become a part of their world, because I think that this is the future. It's going to be probably some weird merge of the two, and for now at least, the digital revolution is happening. I mean, look at this price right here. Bitcoin 106.5 USD per token. 2 years ago, you could get these at this price. I'm going to say about 30K. So 2-year investment, you got a 300% return almost. So there's a quote here by Cynthia Loomis. It's a win. Yeah, it is. But I'm not going to bore you with the dry stuff. This is meant to be a conversation. So in the bigger picture, it's part of a bigger shift, a larger shift. Regulators are slowly pulling back from some of the stricter policies. Again, administration change. Instead of vague warnings, feds are now focusing on real risks backed by clear rules. So what's next? Doesn't mean the fight's over, but the update sends a strong message. Crypto isn't off limits anymore, and banks are finally getting the green light to treat it like a normal part of the financial system. So that's a very nice and concise version of what we've been saying this entire time. So it is nice to see that traditional finance is opening up to digital finance, and all it takes is the right kind of attitude. So when you were growing up and you heard that attitude is everything. It really is, because if you want to make something happen, if you're in the right place, you will make something happen. Just look at what's happening here in the last 6 months. All right, so we're going to fold that one over, and we're going to move on to the other part of this video where we're going to talk about BlackRock returns to Ethereum after their chaos-induced sell-off. So I'm going to talk to you about what happened, and then I'm going to talk to you about what I think or what could be happening. So investment giant BlackRock surprised the crypto market by resuming its massive purchases of Ethereum only 24 hours after making a spectacular sale of more than 8,000 ETH. Why this sudden turnaround? So they bought 11.1 thousand Ethereum after they sold 8,100 Ethereum. Okay, that's a fact. This resumption of acquisition ends a 30-day sequence of This resumption of acquisition ends a 30-day sequence of continuous accumulation interrupted by 2 massive sales. Again, another fact, and maybe you can connect the breadcrumbs already, but if you can't, that's okay. So Ethereum's price jumped 5.54% following the resumption of these purchases, reaching $2,433 American. Analysts see this as a possible rebalancing strategy rather than a fundamental change of course. So that is the in brief. Let's have a quick scroll and we'll see if there's anything else I can add to that factually before we start chatting about it. It was 2 separate transactions for the sale, or rather the acquisition. Yeah. The perfect synchronization. Interesting. So I wonder if they're claiming that synchronization is portfolio rebalancing. So, and it's very possible. I don't think so, but it's possible. So yeah, they mention here that BlackRock holds large volumes of Ethereum, large enough to significantly influence Ethereum prices. So we aren't. I think I'm going to kill it here, and I'm going to go back and we're going to talk about what's happening, in my opinion, or what could be happening, in my opinion. So we've got BlackRock, institutionally one of the largest holders of Ethereum at this time. And while they do have to buy and hold on behalf of their clients, when they purchase through ETFs, they can also purchase for themselves. So when you see a lot of purchases happening, you start to form a pattern. And there's analysts that make their entire living just analyzing what BlackRock is doing, because BlackRock, they're the biggest one out there. They're the Mac Daddy of Wall Street. I mean, you want to be successful, mirror them. So folks have been making their livelihood just watching what they do. And it's very possible that this rebalancing strategy is what's happening. But what also is happening, or could be happening, is BlackRock has, or folks that are administering these funds, could be chatting with other folks behind the scenes and saying, look, we're going to sell 8,000 Ethereum, and then we're going to buy 11,000 Ethereum. And in that process, we're going to make money doing it. There's rules in traditional finance that sort of prohibit this from happening. And because we're still in the wild west of crypto, technically this is allowable, even though it is market manipulation. Now, I haven't pulled the data. I don't know if they did make money on these sales because I don't have the wallet addresses to track them. And I'll be honest with you, I'm not that interested. I just see these numbers and I think rich people getting richer. That now BlackRock is very, very diligent in doing things the right way. When they apply for an ETF, they get it over 90% of the time because they do things the right way. So again, I'm not saying for sure that they're manipulating the price here, but the article does go on to say they do hold a large volume of Ethereum and they can control the price. So if you can, and there is some gray area for you to operate in here, then, I mean, this is a license to increase your portfolio. And you can technically call it a rebalancing of a portfolio, but you're accumulating. So that's what I think could be happening here. Maybe this is this analyst thinking a little bit too much about what's happening, but I read this and I thought, I'm reading between the lines and I see something else here, and I thought I should share it with you because it's worth noting that when the big players in the market are making moves like this, we have to have a look at them and we have to ask why. So again, there's several possibilities about why this has happened. However, you can decide for yourself. They sold 8,100, but they bought 11,100. And they disrupted their buying cycle so that the analysts that analyze them can't say, oh, this was just a sure accumulation pattern now because they've sold off. Now, again, if we're diving deeper, we're noticing they've acquired 3,000 Ethereum during this sell-off and rebuy. So maybe that's part of the analysis. I don't know. I'm not a professor quite yet, although I am working on it. And I just think it's worth reading between the lines here because Ethereum is the number 2 asset in the cryptocurrency space. It is extremely institutional friendly. All you have to do is have a look at the Ethereum Enterprise Alliance to see why. So this is BlackRock surprising the crypto community. This wasn't a surprise to me. If you zoom out in your perspective, you're just going to look at this and say, okay, this is just a different way for them to accumulate more in their gradual accumulation strategy. So we have had a lovely video today. I just want to thank you for your time spending it with us here at tokenpathways.com. This is your friendly neighborhood double daddy. You can find us on YouTube, X, Discord, TikTok, or you can send us an email by visiting us on the website. We hope that you have an amazing rest of your day. We hope that you enjoyed the time you spent with us and maybe you learned a thing or two. We'll see you in the next video. Thank you so much for spending your day with us, folks. Go out and be your super, very best selves. You rock.